Thank you. Good to see you all. So I'm Matt Cole. I'm the CEO of Strive. And it was just 20 days ago that we announced our merger with Asset Entities to become a new Bitcoin treasury company. And we laid out a lot of the differentiations there, and I'm going to want to go a little bit deeper. But today we actually had a pretty big announcement. We announced the closing of our PIPE, $750 million, plus the potential for an additional $750 million, so $1.5 billion through the exercise of warrants, to fund our additional Bitcoin war chest. Yes. So that is the biggest PIPE ever raised to date for a pure play Bitcoin treasury company. But I want to actually dig deep today about how Strive is differentiating itself. What we've seen today from Bitcoin treasury companies is amazing. What they are doing is what's called a beta strategy. So my background is actually institutional fixed income. I used to manage about a $70 billion portfolio of actively managed fixed income securities, the largest of which was structured products. I couldn't use leverage like Bitcoin treasury companies to do. I actually had to find alpha. And so there's a difference between beta and leverage and alpha. And so what Strive is doing is we're going to be actually doing all the beta plays that you see to date, but we're also going to be layering on top of that alpha that we can bring as an asset manager, because that's what we do. We're alpha seekers. And when you think about how to value a company that's doing both Bitcoin accumulation through beta strategies that accrue value to common equity shareholders and alpha, you have to think about the valuation framework differently. And our belief is that it should be higher. And that's why we're doing it. But first, just to give a little bit of more depth on beta versus alpha. So what is beta? Beta is exposure to an asset. And you can take beta exposure up, or you can take it down to an asset. And so when you deploy leverage, which is what Bitcoin treasury companies do, and Strive's going to do it too, if you can borrow in fiat, and I'm guessing this audience is a fan of borrowing in fiat to buy the hardest asset ever known to man in Bitcoin, that's a good trade. I love that trade. And if you can borrow at 10% or less, which is what most Bitcoin treasury companies do, and you buy Bitcoin and it's going up 30% a year, that's a great way to generate returns to your shareholders. And that's this concept that Saylor laid out in Torque, and deploying fixed income instruments to deploy Torque to your company and outperform Bitcoin over the long run. Great strategy, and it commands a premium to Bitcoin, MNAV. And I love that. And we love that, and we're going to do it. Alpha strategies are different. Alpha strategies can actually outperform Bitcoin, whether Bitcoin goes up or Bitcoin goes down. And we know that Bitcoin goes up most years, some years it goes down. So I want to actually talk a little bit about some of the alpha strategies that we're going to deploy at Strive. I laid them out at a high level at the Strategy World Conference, but I want to go deeper today. And so the first of which is leveraging experience that's pretty proprietary to Strive. Our founders, our management, and specific expertise in the biotech area. So there's an interesting phenomenon happening in the biotech space right now, where about 23% of biotech companies are trading below their net cash, their cash after all liabilities are taken care of. Why does that exist? It exists because it's just a phenomenon that happens in that space about every 15 years. The last time it happened was in the great financial crisis, 08-09. And it's happened again. And just to give you a sense, in 2017, it was just 2% of biotech companies that traded below net cash. Right now, it's 23%. So these companies have typically had a negative clinical outcome. Their stock price plummets, but they're very well capitalized. And so when you actually have the deep expertise in the area of biotech, you also know the investor base, you can put together a win-win. And a win-win, in this example, I'm going to lay it out. Imagine a company that has $170 million of cash on its balance sheet. And then it has liabilities of $40 million, likely operating lease liabilities. And it has a net cash position after those liabilities of $130 million. But the market cap of the company is just $90 million. So there's this $40 million delta. For people that are experienced in this space, you can likely acquire these companies at about 110 million. You pocket the difference, and for a Bitcoin treasury company, you can buy Bitcoin at a discount. So clearly, if you can buy Bitcoin at a discount, that is alpha. It's not dependent on Bitcoin going up or down, even though we all know and believe it's going up, but you have an alpha strategy layered on top of a beta strategy. So that's the first example, and we're actually in active discussions right now with the first company that wants to do this with us, and we're considering it. And so this is, just to give sense, a $30 billion current market opportunity that will likely persist for the next couple of years. The next alpha strategy that I want to lay out is actually a partnership that we announced about a week ago with Thomas Brazil and 117 Partners. And so Thomas and 117 Partners are the industry experts in distressed Bitcoin claims. So think about Mt. Gox claims. You have people that have had their claims to having Bitcoin on their exchange locked up for years. They haven't had liquidity. And so Strive is actually able to take advantage of a discounted Bitcoin price to acquire these claims that have definitive legal judgments. That means the Bitcoin is coming to the claim holders, but they're not coming probably right now for about 2 years. There's about 75,000 Bitcoin that are locked up in these claims. And they trade at about a 20 to 30% discount to the underlying price of Bitcoin. So again, by partnering with one of the largest traders and deal flows providers in this space, 117 Partners, we have access to be able to acquire long-term Bitcoin at a discount, not dependent on Bitcoin going up or Bitcoin going down, but just an alpha strategy that we can deploy through our connections and partnerships. That's alpha on top of beta. The last alpha strategy that I want to talk about is actually unique to my background, and it's structured products. And my belief is that one of the biggest opportunities right now in Bitcoin is structured Bitcoin. Why is that? Again, it's all about win-wins. Think about the Biotech. We're giving a win to their shareholders, a win to Strive. In the distressed claims, we're giving a win to the holders of claims by giving them liquidity. We're getting a win by buying discounted Bitcoin. With regards to structured Bitcoin, it's about different investors that have different needs. So my background coming from a pension, we had a need to not take a lot of downside risk for different assets. So it didn't matter if the asset was something that was less volatile than Bitcoin and less return generating, like a commercial mortgage or a student loan or a credit card. At a pension or at an insurance fund, you're likely to buy the top tranche. You're getting downside protection and giving up risk. And you have to remember, those institutions, they only have a hurdle rate of like 7%. Contrast that to Strive. Our hurdle rate is Bitcoin. That is a high hurdle rate, and that should be the hurdle rate for Bitcoin treasury companies. And so what we can do is we can take the equity tranche, the bottom tranche, provide the downside protection. We're not taking debt, we're actually buying a security that's hard backed by Bitcoin, and we provide that downside protection, and over the course of 5 years, which is longer than a typical Bitcoin cycle, if Bitcoin does well, we get massively better returns than Bitcoin. So again, it's the concept that you might see in another company, but by taking actual leverage, actual debt, turning it into a security where you're not actually taking debt, you're just buying a security that has a levered return profile to Bitcoin, that is alpha. And you want to know who typically buys the equity tranches in traditional assets? It's hedge funds. And hedge funds are alpha-seeking asset managers. Strive is going to be an alpha-seeking asset manager. And so again, at this last panel, they laid out great about differentiation. How do you think about differentiation? And to be clear, this is Bitcoin for Corporations conference. It is so early in this space. Less than 1% of companies have deployed a Bitcoin treasury strategy. There is so much room to just simply deploy beta-seeking Bitcoin treasury strategies, outperform Bitcoin, trade at a justified premium to the Bitcoin holdings, which I really believe in. But there's also room for true differentiation, and bringing alpha into the equation is true differentiation. And these 3 strategies that I laid out are just the first 3 of many that we're going to be having down the pipeline. And when you think about Strive and you think about us, think about a world of beta of Bitcoin treasury companies. Strive is going to be bringing the beta, but we're also going to be bringing the alpha. Thank you.